When I was 11, I picked stocks. I had the whole wrong idea. I was interested in watching stocks, and I thought stocks were things that went up and down, and I charted them. I read books on technical analysis. I read Edwards and McGee, I think that was the classic then, hundreds and hundreds of pages. And I read that whole thing over and over again. I read everything. And I thought, the first 8 years, I thought the important thing was to predict what a stock would do and predict the stock market. And then I read Ben Graham, when I was 19 or 20. And I realized that I was doing it exactly the wrong way, but it didn't hurt that I had that background and everything. And I rejiggered my mind, and when I read the book, The Intelligent Investor, and from that point, I never bought another stock. I bought businesses that happened to be publicly traded, but I became an owner of a business, and I did not care whether a stock went up or down the next day or the next week or the next month or the next year, and I didn't have any idea what it would do. I didn't know what the stock market would do, but I knew businesses. I'm a bright guy who's terribly interested in what he does. I've spent a lifetime doing it, and I've surrounded myself with people that bring out the best in me, and you don't need to be a genius in what I do. That's the good thing about it. If I went into physics and a whole lot of other subjects, I'd be an also-ran. But I am in a game that you probably need 120 points of IQ. In 1982 or 3, when the long government bond got to 15%, a company that was earning 15% on equity was worth no more than book value under those circumstances, because you could buy a 30-year strip of bonds and guarantee yourself for 15% a year, and a business that earned 12%, it was a subpar business then. But a business that earns 12% when the government bond is 3% is one hell of a business now, and that's why they sell for very fancy prices. You need the right orientation. 90% of the people, I'm pulling the figure out of the air, but 90% of the people that buy stocks don't think of them the right way. They think about something that they hope goes up next week. And they think about the market as something they hope goes up. And if it's down, they feel worse. I feel better.
And you think about?
I think about what the company's going to be worth 10 or 20 years from now. And I hope it goes down when I buy it, because I'll buy more. March 11th, 1942. I have never had less than 80% of my money in American business. You can call them stocks.
Or equities.
But I see them as American business. I've owned a piece of American business, at least 80% at all times. I don't want to own anything else. I want to own a home and things my family wants and all that. But owning 5 homes doesn't mean anything to me, because I'm going to be happy in one home, and there's a certain amount of things that go wrong with everything. And if I got 2 homes, I know I've got more problems and I don't have more happiness. Many years ago that it's an invisible tax that only one man in a million really understands. The best investment against inflation is to improve your own earning power. The best passive investment, I think, is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency. But it's interesting, in the United States, the value of the dollar since I was born has declined by 94% to 6 cents. But things can work out pretty well even during inflationary times. I mean, if somebody told me when I was born, that the dollar bill is going to go to 6 cents, I might have said, let me go back. I'm not interested in emerging into that kind of a world. But actually, it's worked out pretty well, so I have no complaints. It'd be so much better if they actually didn't have a stock market in terms of buying businesses. The United States economy, and it's very easy to look at the statistics on it. I mean, more people, a greater percentage of the American population is wealthy now, or having more income now than they've ever had. And if you look at whether Bank of America will give you their average deposit, I mean, you just look at the wealth. That doesn't mean everybody's wealthy, but it does mean relative to any other period of time. I mean, people have more money now. They get mortgages at lower rates than they've ever gotten. So if If you worry about corrections, you shouldn't own stocks. I mean, if you can't take your stock going down, it's going to go down sometime if you own a stock, so why worry about it? I mean, the point is to buy something that you like at a price you like and then hold it for 20 years. And you should not look at it day to day. If you bought a farm or apartment house, you wouldn't get a quote on it every day or every week or every month. So it's a terrible mistake to think of stocks as something that bob up and down, and that you should pay attention to those bobs up and down. Stocks sell at silly prices from time to time. It doesn't take a high IQ to figure out that they're cheap, but it does take a temperament that's willing to step up and actually act. But it is gravity. I mean, if you told me interest rates were going to be 15% next year on bonds, there's a lot of equities I wouldn't want to own now, and I would buy a lot of governments at 15, and I kind of wish I had it in 1982, but I didn't. Right today, you live in an environment where the bottom 2% in terms of income in the United States, the bottom 5%, and for sure the top 1%, all live better than John D. Rockefeller was living when I was 6 years old. John D. Rockefeller was the richest man in the world. And today, you can get better medicine, better education, better entertainment, better transportation. You can do everything better than he could. It's astounding. That's in my lifetime.
So there has been progress, obviously.
Oh,
And nowhere more than in the United States.
there's no country that's done what our country's done. If you go back 3 of my lifetimes, you're looking at less than 1% of the world's population, closer to half of 1%, are sitting in this land. They don't work harder than people in all the rest of the world. I mean, in terms of hours of unpleasant labor, everybody's got hours of unpleasant labor in those days practically. They don't come laden with gold and, they are half of 1%. And what's happened, of course, is that organizations like to grow. So they set up indexes on different industries, different countries. And as soon as you do that, you're violating basically what Jack Bogle said. He says you don't know enough to pick the right businesses, which means you don't know enough to pick the right countries, you know enough